Do you owe the IRS and feel overwhelmed by the balance? If you're afraid of levies, garnishments, or other aggressive IRS communications or actions, this video is for you. Today, I'm going to explain IRS installment agreements, what they are, how they work, and how they can help stop IRS collection activity while paying your tax debt over time in manageable amounts. So, what is an IRS installment agreement? An IRS installment agreement is a monthly payment plan that allows you to pay your tax debt over time instead of all at once. Once approved, IRS collection activity is generally stopped, levies and garnishments are usually avoided, and you can gain breathing room and stability. Basically, you can get your life back. This is one of the most common and effective solutions for taxpayers who owe the IRS. And there's not just one option, as you might think if you call the IRS. So, why do taxpayers use installment agreements? Most taxpayers don't owe the IRS because they're irresponsible. The reality is that life happens. Installment agreements are often used when you owe more than you can afford to pay at once. You want to avoid bank levies or wage garnishments. You received IRS notices like the CP14, CP 501, 503, 504, or even the final notice of intent to levy, and you're trying to get back into compliance. It's a way to cooperate with the IRS without wrecking your finances. So you may think that there's just one payment plan, but the reality is there are several types of IRS installment agreements, and choosing the wrong one can cause problems later. The first one we're going to talk about is the guaranteed installment agreement. This is when you owe $10,000 or less, not counting penalties and interest. You filed all your tax returns that are required. You've had no installment agreement within the last 5 years, and you can pay the balance within 3 years. Finally, you agree, as with all of these payment plans, to stay compliant going forward. If you meet these requirements, the IRS cannot deny your request. The second one we're going to talk about is the Streamlined Installment Agreement. This is generally for balances up to $50,000 of assessed tax. There's no financial disclosure required. Your payments are going to be made in 72 months or less, and there's fast approval in many cases. If you set this up correctly, you also may be able to avoid a notice of federal tax lien. Next, we're going to talk about a non-stream installment agreement. And that's basically all of the other types of agreements. These are going to be higher balances. They may require financial information, and you may need to review the income, expenses, and assets of the taxpayer. The IRS may need all of that information. Those requirements are based on whether it's an automated collections or with a revenue officer, the amount owed, the ability to pay over 72 months or over the statute of limitation, or you're unable to do so. All of those may change what the requirements are within the IRS to get in those plans. So, what does an installment agreement not do? It doesn't automatically reduce your tax balance. It's not a settlement. The penalties and interest are usually going to continue, and missing payments can default the agreement, so you can be right back where you started. That's why it's critical to choose the right type and the right payment amount to begin with. So, how do you qualify and avoid problems? To qualify for any IRS installment agreement, first of all your required tax returns have to be filed, or the IRS won't even consider it. You have to stay current on future taxes, or else you're going to default and be right back where you started, as I mentioned earlier. So, because of that, the payments have to be realistic and sustainable. One of the biggest mistakes taxpayers make is agreeing to a payment plan they can't afford, which often leads to default down the road and more problems for the taxpayer than they started with. So, when do you want to get help from a tax professional? Well, the more you owe, quite often, the bigger the problem, and the more you need to bring in a professional. If you owe more than 25,000, you might want to consider it. If you owe more than 50,000 and you need to get into a non-streamlined plan, that's probably time you want to consider it. Also, when you have unfiled returns or you want to explore something like a partial pay option, professional guidance can help you set up the correct amount, avoid defaults, and protect your income and assets. This is exactly what we do every day with our clients. So if you owe the IRS and want to know whether an installment agreement makes sense or what type of agreement makes sense or you may qualify for, reach out to Jablonsky Tax Relief at 972-821-1991 or click the link below. Like this video, subscribe for more IRS guidance, and leave your questions in the comments section below.